Hello again, people. Right, trade number 6. It's just gone quarter to 11 and in the morning in the UK, and I'll try to explain why I took it. Firstly, we're above the hourly 8 EMA and it's green. We've got this reversal here: high, low, lower, high, lower, low, low, high, inside bar so we don't count it, higher, low, higher, high, and close. That's that level there, the high of that candle there. This is the 5-minute chart, remember. It was also a break of support. The green line under that yellow line I've just put on there was a support. Can't remember exactly what it was now, but clearly it was a support and it's broken through it. I'm not going to get into the nuts and bolts of it, but it's there. We also broke another support here, closed through it, M5 low, drawn on that candle there by the looks of it. So critically, that hasn't held as support. We've closed and broken above it, so that was a green light to start watching the lower time frames. The reason I didn't want to get involved in a long here was because there was no momentum. There was, and that's why it's pulled back and messed about a little bit, and that's important here. So then we've got the pullback and everything. It hasn't confirmed against itself, or hasn't reversed, because we can't sing the song. This would have been the new support. The high of that candle was just above that white descending trend line, so it would have had to have broken high, low, lower high, lower low, and close below that low for this to have reversed. So all we need really is an M1 reversal to the long side, but M1 on its own isn't a strong enough time frame to enter, in my opinion. So I keep watching the M5, because you'll get quite a few false entries until you get some corroborating M5 information. So let's put a vertical on the new candle there and have a look at what M1 did. So I've drawn a new line on there because this is quite a powerful move. Although it didn't break the low there, and that sort of bends my rules, I did say as a caveat that I will connect lines of interest, as it were, as well. And as you can see, I mentioned this one here. I drew it here and it ended up testing it there. It finally broke through it there and the price went up. That's not how I trade under normal circumstances, and I didn't take that long. I think I was eating my breakfast actually. But I'm watching this for, there was momentum there, so that would have been a perfectly valid entry in my opinion. But I try to dot as many I's and cross as many T's as I possibly can when I'm considering entering. There was in fact divergence as well there, so looking at it now, so you can see why this is a potential for a long trade. So I'm trying to teach you price action trading as I understand it, guys, and with my sort of unique reversal method and candlestick analysis. So what did I see here? Well, I've mentioned this new thing. You can see there's no momentum whatsoever there. I don't want to be going down unless I'm broken down and possibly pulled back and retested and this is then red. For some reason I've not got the all averages indicator on here. It's just a straight purple moving average. This would be green looking at it now. So I can't consider shorting it. And so that's why it's dead handy to have all these levels on here. Plus we're using an H4 resistance line from the 18th of the 3rd. That's why it's important to draw all your lines on, and it's held as support. Plus there is a green line there, an M5 low of some sort drawn on here. Not quite sure why I did that, but it's on there. So we've got a trend now: low, high, higher, low, higher, high. This is a pullback. We've broken through that 1900 level. All these are reasons for thinking this is bullish. We can actually draw an ascending trend line connecting these things now, that one to that one, because that high is broken. We can now, once this high is broken, we can connect that that high there broken with that means that is a valid support according to my method. Everyone's different how they draw trend lines. You could actually tighten that one and that one there now, because that resistance has been broken by that. So that's how I do my trend lines. So this is important in my opinion, because then you've got a roadmap to see where the price is going. When it breaks this one, it's got to come back and test this one likely, and break that and come down and test all these levels. So let's drag the trade on. And remember, I only take what my charts tell me is available. Don't get greedy. I took it from that support line, that green line there, to that resistance line above me, drawn over here somewhere, and that's it, guys. You know, so that is I can't even remember how many pips it is, but it's more than what I used to go for. It's 10 pips, probably a little more. Yeah, 9 or 10 pips. So nearly twice what my daily requirement used to be. And I'll explain that. Actually, what I've done is I've devised a really solid trading system, and I just used to trade the Frankfurt Open, and a letter out of Billy TT's book, take the trade, earn your money and go away and play. And that's what I used to do, mess around all day long. Then I would come back at night and I would wait for a good reversal, quality signal, at the end of the day when the reversals were likely to happen, and I'd probably take another trade. And if I got it, it meant I doubled or trebled my income, because I would always take the 5-6 pips was my bread and butter. That's what I needed to live on a damn good lifestyle. And then if I got another trade later on in the day, I would treat it as a bonus, and much the same as Billy TT does on his thread, stack it away as credit for when you do get that inevitable loser. So that's the thing, guys. I mentioned earlier stops and targets and things like that. That's the gap that I wanted to exploit, and I did. There was another gap here, you can clearly see it, up to the next level. That's another 15 pips, I should think. And then finally this new nuance. Once that high is broken by a green bar, that's the pullback. That high, you'll notice I waited, I applied absolute discipline, and I entered on that candle there, that bar there, because of numerous reasons. The break of this candlestick and close, that candle there, the break of this high with this one here. Even my trusty little baby indicator had told me I've got to go long. Trend analysis, low, high, higher, low, higher, high. All these things are designed to give you belt braces and an extra pair of braces. When you enter that trade, you enter with absolute confidence. So thank you for watching. The market should quieten down a bit now, 11 o'clock in the morning or 10:55. 6 trades, 6 winners, and I hope I've described them well enough for you here, for you to take something away from this. It's not about bragging, guys. It's all about teaching, helping traders, helping traders, and hopefully giving you the confidence watching my videos. That's it, guys. Disclaimer once again, all of this is for teaching purposes only. None of it is about recommending trades. Trade the gaps, guys. Draw your gaps on the charts. Trade the gaps. This is fantastic. Build your own method. You might just want to trade off of this 8 hourly 8 EMA. Go and look at Digger's thread, Digger 1. It's not Digger's thread, Aussie's thread. Just Google Aussie or Digger 1 and you'll get to the Forex Factory thread. Those guys are gods in my opinion. But I'm catching up now. So thank you for watching. Have a great day.